Are stockbrokers the next victims of the white-collar recession? While bank job cuts have made headlines, the broking industry is also bracing for purges if business doesn't pick up. The struggling local broker Austock has found a white knight, agreeing to a takeover by the Singapore-backed Intersuisse. But with investors still in hibernation, a cloud remains over the rest of the industry. Neil Woolrich reports.
First came the fires, now for the clean-up. As Greece recovers from the latest round of rioting, global investors remain wary about plunging back into the market. That's putting pressure on stockbrokers around the world, even here in Australia.
If difficult times and low trading volumes continue, we could see the stockbroking sector at about 70% of the size of last year.
Well, this is as bad as anything I've ever seen. The worst two previously, I think, were the early 1970s and then the early 1990s. This is a longer sustained low volume market.
Industry veteran Harold Shapiro says an increase in activity in the last couple of years encouraged some brokers to start rehiring. But now they're facing higher costs and the well-documented problems in Europe.
Post-August, when the European shock came through, volumes have declined, down some 20% year on year at this stage, the last 5 months. And that has put the industry under a lot of financial pressure.
Already Australia's finance sector is under strain, with Macquarie Group to slash 10% of its workforce, ANZ cutting 1,000 jobs and UBS warning of a white-collar recession. Now there are fears the stockbroking industry could also be pared back.
In the short term, there continue to be job losses and perhaps industry consolidation. The markets are fragile, and especially fragile to any external shocks that may occur.
That's been reflected in the share prices of listed brokers like Austock, Bell Financial Group and Wilson HTM, which have been routed since the market peaked in late 2007. Despite all the pessimism that's about, Intersuisse has just agreed to take over Austock, and Deputy Chairman Jonathan Buckley argues it's a good time to buy.
The bigger players in the market, the bigger financial players, tend to scale up at the more buoyant end of the market and tend to leave it late to scale down when in difficult economic conditions.
The question now is which of the remaining broking firms might be next to fall. RBS Morgans is under a cloud given the troubles of its 50% shareholder, Royal Bank of Scotland. And many individuals might choose to leave the industry as well because there's simply not enough money to go around.
A lot of them are trading themselves to try and actually get some dollars. A lot of them will be going through their savings to try and actually just maintain their role in the business.
On top of the cyclical downturn, the full-service broking house is facing a structural shift as well, with the rise of online trade.
As people look at the returns of their portfolios, and they haven't been great over the last couple of years, they start to look at the expense required to generate that return.
What the industry needs now, though, is some decent trading volume, but that won't happen until there's a sustained confidence boost, something that seems as unlikely as a lingering calm on the streets of Athens.